What's good, people? I'm bringing you another video of another technology company that is disrupting yet another industry. Let's get to it. So to begin this video, I'm just gonna start off with a little disclaimer that I am not a financial advisor. I don't even have a college degree yet, so take everything I say for a grain of salt. But yeah, let's move right into it. So today I'm bringing you a company called LMND. This company is disrupting the insurance technology space. They recently IPO'd in July 2020. They're currently sitting at a price of $159.02 with the ticker price LMND on the stock market. So this company currently right now is valued at $9.5 billion. So first things first, let's dive into what this company is. So LMND is offering a mobile insurance solution using AI, and it allows their customers to purchase and customize their homeowners, renters, term life, and pet insurance, and they are able to receive their claims within minutes. And this is not a joke, this is actually real. Customers have reviewed that they were able to receive their claims within 1 to 6 minutes, which is extremely fast compared to the rigorous and long process insurance claims usually take. So now you can see LMND charges a flat fee for policies, and instead of keeping their money, they use those money and donate it to causes that they care about. We'll dive deeper into little details like that in a bit, but I also wanted to talk a little bit more about their business model. So they've been trading at 200% since they IPO'd, which is an insane growth rate in a matter of months. LMND has also been growing exponentially. Recently, they launched in France, and they added new insurance plans as well in Netherlands and Germany. So they're going outside of the United States market, and they're expanding to Europe. And also here you can see in 1,500 days of launching their service, LMND announced 1 million active users. That is a huge rate of growth compared to the 45 years it took the industry leaders like State Farm, Allstate, Geico, and USAA. So now let's look at LMND closer. So here, if you go on their website, you see that they offer these options here: homeowners, renters, pet, and life, which we just talked about. So here is the first thing you see is forget everything you know about insurance. And also you can see here that they are ranked a 4.9 stars out of 5. And this is a company, again, that has 1 million users. That is a very high rating for a company that just recently went on the market. So you can see that their price rates are here: $5 a month for renter, $25 a month for homeowners, $9 a month for term life, and $10 a month for pets. Everything is instant. You get insured in 90 seconds, and you get paid in 3 minutes. Very, very quick. And here you can see the breakdown of how many customers have switched from the other insurance companies over to LMND. So again, here you can see their business model very quickly. They charge the flat fee, and then the money that's left over, they give it to nonprofit organizations here. So now I want to talk a little bit more about the growth rate of LMND. So here we can see that their Google search is growing exponentially. Comparing 2016 to 2019's volume, you can see that the graphs line is very, very steep compared to Progressive and State Farm, which is kind of declining in terms of the growth rate. The growth rate, not necessarily declining, but the growth rate is becoming more stable and like a flat line, as you can see here. In addition, you can see here that in a market, specifically Texas, LMND is beating the rest of these companies that have 100 years of leg up on them in the market. So here you see LMND has 28% of the market share compared to the leader, the second leader, State Farm, at 24%. This is huge because even after hundreds of years of building out this business, LMND is able to walk in here in 5 years and grab the largest pie. So just gonna go over some quick stats that shows what LMND has been up to. So by 2020, LMND welcomed 18 million visitors to their website. and they were able to sell over 1.2 million policies. And also here you can see that they have seen over almost 1 million downloads on their application. And here you see that Lemonade also, their AI seems to be responding to more customers than people in the company are. And it seems to be very efficient because this company once again is rated at 4.9 stars out of 5. So if the AI is managing to actually perform in high capacity of this standard, you can imagine what this is going to look like in terms of scalability. This company is able to scale very quickly without a lot of manpower. In addition to this, you can see here that they also expanded their licenses by 40 times, which is increasing their market size as well, because they're able to increase where they're able to serve people. And you see that they expanded to an area that's home to over 800 million people as well, from 20 million people when they launched. So this is a great exponential growth that we're seeing from Lemonade in its very early days. So now let's take a quick look at the map to see where Lemonade is currently operational. So you can see here that they're mostly operational in the United States as of now, but they're also growing in Europe. So they have 3 countries, I believe Netherlands as well, in Europe, which is huge because they're scaling very, very fast. Once again, this is a company that just came into the market 5 years ago. Now, really quick, I really want to talk about competition in this market for Lemonade. So when you think about it, so they're looking at the top 5 insurance companies, starting with State Farm, Berkshire Hathaway, Progressive, Liberty Mutual, and Allstate. So these are the big brand names that we know in this industry, the big tycoons. A lot of these companies were formed almost over 100 years ago. So these companies have a very, very long history in this industry. They know the ins and outs, they understand what they're doing, and they've kind of paved this path. The reason this company, Lemonade, is very interesting is because they seek to disrupt this entire industry by using technology, making claims and processing things way more quicker, way more efficiently, cleaning up the process. And as you can see, there is a lot of brand loyalty in a very, very early age of the company as well. So outside of the big competitors, let's look at other potential disruptors and what they're trying to do in this space as well. So here you can see the chart of other insurance tech companies that are hoping to come into the space. So first we have Cover, founded in 2016. Then we have Slice Labs. Then we have Zelros and Speakside. So you can see all of these companies are mostly private at this time. They all seem to offer some sort of insurance, either for people or for businesses. So if we go and take a closer look here, we see that these companies are nowhere close to being where Lemonade is currently at. Lemonade seems to be leading the charge in disrupting this market. As you can see here, they have been growing significantly. Their Alexa website ranking is in the 19,000s versus the 200,000s and we see here. So Lemonade, also we can see the funding is much different in comparison to these other companies. Lemonade is at a larger scale. So I want to add some important news, some breaking news. Under 24 hours ago, Lemonade just introduced a new product line called their life insurance. So I know when I started this video, I showed their life insurance inside of this, but over 24 hours ago, that wasn't on their website. So if you look at this article here, it's talking about their new product. So Jason Moser is asking about talking about Lemonade, and he wants to start off talking about them, and then he's talking about the new product line that they're ready to launch. And then Matt is responding to him saying, yes, they're launching it now. And then you can go on Lemonade's website and you can apply for your life insurance. And it just happened. Lemonade is using their AI machine learning driven approach to insurance, and they've concentrated on very small areas of business. So initially they focused on homeowners insurance, renters, and pet policies. So just to talk a little bit more about the market size that Lemonade had been operating in and now is operating in. So earlier when they were in the renters and the pet and the homeowners market, they were in a market of approximately $5 billion market. They were trying to scale in that market. Recently now, after adding life insurance to the plan, they just added over $730 billion worth of market size to what they're looking at. So this is huge because not only are they growing exponentially within the areas they're in, but they're now seeking new and adjacent product lines that they can add and they can grow into. Life insurance being one of the biggest insurance plans and market sizes. So now let's talk a little bit more about some risks involved in this investment. So if we look closely here, we want to pay attention to Lemonade's gross loss ratio. And basically, the reason we have to pay attention to this is because insurance, as we know, is unpredictable. The reason and the way insurance companies make their money is whenever there's money left on the table from whatever they have to pay out for damages and whatever ends up happening. They're keeping 25% of everything people pay, but they also pay out 75% of that to reinsurance partners. So reinsurance partners are people or insurance companies that insure the insurance company. I know it's a cycle loop. So Lemonade has other insurance company that also protects them in the case of them not being able to pay for these claims. So in a situation where since their plans are very cost effective, in a situation where they're not able to pay these claims, other insurance companies that are insuring them are going to step in and cover this claim. So they pay those insurance companies 75% of the cut. So now the reason we have to pay attention to this gross loss ratio is because they have negotiations and agreements, business deals with these insurance companies. So if there are, if the insurance companies that is insuring them has to pay more than 75% of whatever it is that the claims and damages are, it's a bad deal for those companies. So these insurance companies are gonna try to negotiate something that makes more sense for them. So 75% seems like a sweet spot. If Lemonade's customers don't have claims that go past the 75% marker, then Lemonade is gonna be in a great spot moving forward. So now I wanna close out with a little bit of financial data. So we can see here that in January 11th, Lemonade was trading at $183.26. So the reason these volatility in the market was Lemonade released a report that they were going to do a second round of shares in IPO market. So they were going to release more shares to the public. So that's an event that occurred on January 11th. Not saying this is a definite reason why this happened, but it definitely points its direction in this vicinity. So then going closer to the actual numbers, so let's see here. So when we look at the annual report, first things first, we can see that the revenue is growing, and we can see that it is growing at 199% rate per year, which is great number. But here also we can see that the net income is negative. So I am not too worried about a negative net income as of now, especially for a company that is focused on scaling and growing. It makes sense that they probably have not figured out their net income yet. So then when we look at their profit margins, it seems to be growing at 31% rate. So it's still in the negative, but it seems like it's growing at a reasonable pace to beat that negative. So then also, let's take a look at the cash in hand. So when I look at the cash in hand, I feel very comfortable. So they're growing in cash in hand, they're very liquid, they're able to diversify their investments and move money. Cost of revenue is increasing a little bit faster than the revenue is increasing. I'm not too worried about that because, as I said again, this company is focused on scaling, which could be a reason why these numbers don't look the way bigger companies do. So anyways, I just wanted to bring you this full breakdown video on Lemonade and what they have going on. This is a company that is going to be disrupting this space very, very quickly. And I think as a company that's focusing on their customers, I think they have a long shot, and I think they're gonna win this market because insurance is one of those businesses people do not enjoy particularly getting every month, but they know they need it. This company seems to be getting people, putting people first in a way that people probably haven't seen before from insurance companies. So I'm willing to bet that this company and people are going to be on the side of this company in the years to come. So anyways, I will be bringing more videos about other disruptive technology companies. Stay tuned for more. Let me know if you have any questions about Lemonade. Let me know if you have questions about other companies, and drop in the comments whatever you want to hear. Drop a like on this video as well, subscribe, and let me know what else you guys are interested in hearing about. Thank you again for coming by and stopping and watching this video. I will see you soon.